What's up, guys? So it's that time of year again. Uncle Sam is knocking on your door and he is asking to collect. So it's tax season. That being said, as a wholesaler or as a real estate investor that's wholesaling real estate, how do you pay taxes? Well, I got you covered. You come to the right place. So before I show you guys what I'm doing currently today, I'd like to show you or explain to you where I started from and, some things I had to learn on my journey to getting a system in place to pay my taxes consistently. So back in 2018 is when I started my real estate journey. Took me 9 months to get my first deal. You may be familiar with my story. If you like to learn the specifics of it, you can watch Steps to Success, episode number 4, The Journey So Far. Click the link up there somewhere. But when I first started the real estate, wholesaling side of things, it took me 9 months to get my first deal. Before I had my first deal, I was working at JD Byrider in Enterprise, making about $14 an hour, making about, $1,400 a month. That's about, where I was ranging at. And after, or probably about $2,000 a month. I don't know. But either way, my first month of wholesaling real estate full time. It took me 9 months to get that first deal. Once I got the first deal, I quit my job and I started wholesaling full time. It was a snowball effect for me. So for that first month, I went from $1,400 to $14,000 and everything was very lovely. So with me continuing my wholesaling process, I was able to sustain a life and I've been full-time wholesaling real estate for the last 2 years. So I was good on that note, but I ended up learning at the end of the year that I had to pay taxes. And I knew I had to pay taxes, but it didn't really dawn on me because I came from a W-2 income where the taxes is withheld from each check versus having an entrepreneur 1040 easy, all those forms, versus having that type of income where your taxes are supposed to be paid quarterly. I didn't know you were supposed to have estimated quarterly taxes my first year, but I was told the crazy statistics of, like 80% of businesses fail or 60% of businesses fail within their first year just due to not paying taxes. So at the end of my first year, I had, made way more money than I ever saw in my lifetime. And I was 19, turned 20 that year. And I did great. But at the end of the year, I got a huge tax bill. So I paid one of my quarterly estimated taxes at the end of the year. Then I ended up paying my other remaining amount of taxes on January 1st. I did another estimated payment. And then I had another remaining balance that I ended up getting extended until October because that was a huge tax bill. And it was basically, you work all year, you get all these big checks. But then at the end of the year, you got to pay this tax bill. And it's like, dang, where'd my money go? So I ended up devising a plan or putting together a plan, however you say it. I put together a plan to make sure that I sustain having paid my taxes and also let the IRS owe me some money at the end of the year instead of me owing them money. So this is what you do. And to make it real simple, you'll take 30% of each commission check or whatever you want to call it, of each assignment fee, double close, whatever you want to call it, of each check, you'll take 10%. So what we do in real estate transactions is your money is showed on your HUD statement for the most part. So on your HUD statement, there's no taxes taken out. So say if you get a $10,000 assignment fee and you want to take your taxes out. So what I like to do, like I said, is take 30% off the top. So taking 30% off the top leaves me with $7,000 and I have $3,000 in my tax account. So the money that I'm putting away from my quarterly tax payment. So say if your first, let's just say your first real estate or your first quarter, let's say your first quarter in wholesaling real estate, you get $80,000, right? So that $80,000, how much you will owe would be to your quarterly taxes would be around $24,000 if you just wanted to take 30% of that. Make sure that's right. Yeah, 24,000. I was right. So $24,000 is how much you will want to pay at the. Let's say this is your first quarter. We're in, January right now. If you earn $80,000 this first quarter, so by April you will want to pay $24,000 in estimated taxes to the IRS. Now, let's say your first year wholesaling real estate, you do great. You end up earning, $80,000 each quarter. So that means you earn $320,000 for that first year, which means you would have to pay $24,000 each quarter. There's 4 quarters in a year, so you would have to pay $96,000 to the IRS in estimated taxes. Now, the way the IRS could end up owing you money back is because you got to factor in the expenses that it takes to run your business, right? And also, if you own property, then you can deduct some property expenses and also depreciation. So all of that, can factor into maybe, you paid the IRS $96,000, but you had so many expenses and business expenses that you ended up, the IRS ends up having to pay you back, $50,000 because you were really supposed to pay $46,000 in taxes. So that way, at the end of the year, instead of you feeling like you have, the whole $320,000 and you're spending the 320, going on vacations, buying your family something, just living up the good life because you feel like you got that whole 320, and then you're surprised at the end of the year when you find out you owe $96,000, then you're working backwards. Versus if you start at the beginning of the year, you pay that quarterly tax, estimated quarterly tax on, March 31st or April 1st, you'll be fine either one of those days. You pay that estimated quarterly tax right there and you go each quarter, then you're ahead of the ball. So instead of you feeling like you have the whole, $320,000 you made, and keep in mind, as an entrepreneur, guys, you make your money, you eat what you kill. So if you're there and you're, constantly making checks every month, then that's how it's supposed to go. But if you've already paying your taxes, then you're not worrying like, man, I wonder how much I owe. Then you're like, they're going to end up owing me some money because I got all these business expenses. So you'll be good. And if you play your cards right, you can end up paying no taxes at all. And if you're paying no taxes at all, then that, puts you on a whole nother level. And that's where we're all trying to get to anyway. Of course, we're getting money and paying taxes, but at the same time, if we don't have to pay those taxes, then, show me how. So today, what I'm going to show you guys, though, is how to take advantage of the estimated tax payments. So I'll go ahead and jump into it, show you guys how to, navigate the IRS site, pay your estimated tax payments. Now that you know why you have to do it, I'll show you how to do it. Let's jump into it.
Is head over to irs.gov. Once you get here, you'll be taken to the front, main screen page. Then you'll go to pay. So you'll type in bank account, direct pay. But if you were paying your, estimated taxes from a debit or credit card, you can tap this. But they charge you if you were to pay that. So you might as well pay with your bank account, direct pay, which is just your routing number and your account number. So you scroll down, make a payment or look up a payment, but you'll make a payment. So the reason for your payment would be for estimated tax. So you got all these different, things you can choose from, but yours is estimated tax. They can only give you one because, that a 1040 represents self-employed. And when you're, self-employed, you have to pay quarterly taxes for this tax period, 2021. So that's it, guys. So, once you do that, you'll press continue. And, is that correct? So from here, they'll ask you some things to identify for your personal information. In a couple of steps, they'll identify that it's you. They'll ask, a couple more questions, and you'll end here with the payment confirmation. And that's it. So now you guys are aware on how to pay those estimated taxes. So this year of 2021 is going to be a breeze. You want to make $320,000, and the IRS is going to be paying you money back. So, congratulations.